Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 29th, 2025, and we're diving into the first quarter earnings report of Enterprise Products Partners. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Enterprise Products Partners is a major player in the midstream energy sector, and their latest earnings report provides some interesting insights into their performance and strategic direction.
Revenue and profitability overview. Let's start with the financial highlights. Enterprise reported a net income of $1.4 billion and an earnings per share of $0.64 for Q1 2025. How does this compare to last year, John?
Compared to the first quarter of 2024, net income decreased slightly from $1.5 billion, and EPS dropped from 66 cents. However, it's important to note that their distributable cash flow increased by 5% to $2 billion, which allowed them to raise their distribution by 3.9% to $0.0535 per unit.
That's interesting. Despite the slight dip in net income, they seem to be focusing on returning value to shareholders.
Exactly. The increase in DCF and the distribution hike indicate a strong cash flow position, which is crucial for maintaining investor confidence.
Operational efficiencies and future outlook. John, can you elaborate on Enterprise's operational efficiencies and their future outlook?
Sure. Enterprise maintained an adjusted cash flow from operations of $2.1 billion, consistent with last year. They invested $1.1 billion in capital projects, focusing on growth. They have $6 billion worth of major projects set to generate cash flow in 2025, which is a positive sign for future earnings.
And what about their liquidity position?
They have a solid liquidity position with $3.6 billion available, which provides them with the flexibility to fund these projects and manage any unforeseen challenges.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did Enterprise's different segments fare this quarter?
The NGL Pipelines and Services segment reported a gross operating margin of $1.4 billion, up from $1.3 billion last year. They achieved record natural gas pipeline volumes of 20.3 trillion BTUs per day. However, the Crude Oil Pipelines and Services segment saw a decline to $374 million, and the Petrochemical and Refined Products Services segment also decreased to $315 million.
What strategic initiatives are they focusing on?
Enterprise is expanding its infrastructure with projects like new natural gas processing plants and NGL export facilities. These initiatives are expected to drive future growth and enhance their service capabilities.
Market reaction and analyst expectations. John, how did the market react to Enterprise's earnings and how did they perform against analyst expectations?
Analysts had forecasted an EPS of 69 cents, but Enterprise reported 64.4, missing expectations. Despite this, the market reaction was relatively stable, likely due to their strong cash flow and strategic investments. They also repurchased $60 million of common units, which is part of their $2 billion buyback program.
So while they missed the EPS forecast, their strategic moves seem to have cushioned the impact.
Yes, their focus on long-term growth and shareholder returns is likely reassuring investors, even with the short-term EPS miss.
Key takeaways. In summary, Enterprise Products Partners reported a solid first quarter with a net income of $1.4 billion and a DCF of $2.0 billion. Despite missing the EPS forecast, their strategic investments and distribution increase highlight their commitment to growth and shareholder value. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Enterprise's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Enterprise's performance in the comments below.